Thank you for joining me today. My name is Leah Everly, and on this segment of financial strategies creating generational wealth, I will be discussing with you about what juvenile life insurance is. So, the agenda today, we will discuss who I am, why I do what I do, then what is juvenile life insurance, disputing some myths, discussing the benefits, and then opening up the floor for questions and answers. So, who am I? Well, I am a mother. I have a significant other. I have two beautiful children, well, grown women who are in their 20s, and they've given me four grandchildren. But in a career sense, I am also a full time imaging radiographer. I specialize in computerized tomography, aka CAT scans or CT. I entered the field of healthcare when I was 19 years old, so I have been doing it for a very long time, about 23 years. Over the time, being in healthcare, and if you are familiar with healthcare, you would understand and relate to this, but it does a lot to your body, a lot of wear and tear. So there was a point in time when I decided I wanted to do something different. I don't want to retire out of healthcare. I want to be well when I'm in my 60s, but I want to retire when I'm younger in age so that I can still enjoy life. And I want to enjoy my kids and my grandkids. So I decided to kind of do some research and look into other ways to making my money. And aside from investing in real estate, I decided to become a notary public back in September of 2024. About a month later, I was introduced to life insurance, and I thought that would be a great way to integrate life insurance and notary to have a way to educate my community on estate planning, teach them some financial literacy that I had gained knowledge of through intense studying and research, and trial and error in life in general as well. So that is my journey, and that is what led us here today. Why I do what I do? Well, my family. I love my family. You have a few pictures here where I'm missing my oldest daughter and my two grandsons, but have here my significant other, and then my sister, my youngest daughter, and my two granddaughters. But I do this for my family, and I do this for your family. So let's dive right into what is juvenile life insurance. Juvenile life insurance is a permanent life insurance policy that any child between the ages of 0 up to 17 years old can qualify for. A lot of times it's guaranteed, um, which means there's no medical exams or any type of things that you have to go through. You just have to, as a parent yourself, have life insurance that's equivalent or more to what you're trying to get for your child. Permanent life insurance is an umbrella, but whole life is the specific name of the policy that your child would have. A type of permanent life. There are different types of permanent life, but for children, they are defaulted to whole life. Now, recently I have been introduced to they call it index universal life insurance, but that is through one of my carriers, Transamerica. Most other carriers are providing whole life type of permanent policy. With the whole life policies, they come with a fixed interest rate in the cash value account, where with the index universal, aka IUL, those interest rates they change, aka, well, for the sake of the word index, they're indexed. And what that means is that when the stock market fluctuates, as it goes up, the interest rate on the cash value account goes up to a certain amount. Um, and when the interest rate goes down, or when the stock market goes down, the interest rate will also go down as well. Now, the funds in the cash value account are not directly invested into a stock market account, because life insurance is not an investment product. A life insurance is a savings product, more or less, or a financial product, but not an investment. So your money that's tied into the cash value account, which is built into this life insurance policy, is not directly invested into the stock market. However, it is mimicking the stock market. So their interest rates that you receive is in relation to how well the stock market is doing without being directly involved. So that's the difference between the whole life, where you have a fixed rate regardless to what the stock market is doing. That cash value will always have that fixed rate, and a lot of times with children, their fixed rate runs like 4.5%, versus having a child's policy, or even an adult, but anyway, an IUL, or Index Universal Life, where the interest rate is not fixed, it's indexed, and it's indexed to mimic the stock market's uh, growth. And when the stock market declines, it'll decline, but it'll only decline to zero. Okay, so understand there is a difference. You have whole life that's always at 4.5%, and IULs that could go up or down, but it will never go below zero. So you'll never lose your money in the cash value account. And I really wanted to just emphasize that because it's kind of confusing for a lot of people. Over to the left of my screen here, I have a list of some of my favorite carriers that I work with the most. I am contracted with various other carriers, but I have found that these specific carriers offer some of the best policies at the best rates for my clientele. And that's Gerber, Transamerica, Mutual of Omaha, Forester, Royal Neighbors of America, just to name a few. An investment in knowledge pays the best interest. That's a quote by Benjamin Franklin. And it's a very something I want you to ponder on. And we're going to just start disputing some of these myths that keep people or make people hesitate on getting a life insurance policy for their child, and counteract the myths with some facts. So one of the first myths I want to touch on is that the only purpose to getting a life insurance policy is to cover for burial expenses. That is not true. The truth is, life insurance not only for your children, even but for yourself, but if it's a whole life or permanent policy, it provides a cash value account that accumulates compound interest. This savings can be used for future investments without a penalty, fee, or tax. All right, this is governed by the IRS code 752. I always get that number wrong, but it's an IRS code that it governs how the money is used. So basically saying that um, if, for instance, and I'm going to touch on this more in detail, but let's say that your child gets of age and they realize they have accumulated a certain amount of money in their cash value account. Well, if they don't have to be 59 and a half years old like you do for your 401k, you don't have to worry about there being a penalty fee because you withdrew from it or whatever, or borrowed, I would say. And you're not going to get taxed. And the reason why you're not going to get taxed is because you're borrowing from it. Okay? Now, if for instance your child gets bad advice and someone encourages them to um, surrender their account when they get of age, that's closing out that life insurance policy together altogether, and they will receive their money in full, and then that it will be taxed. So understanding how the system works, how your policy works, you as a parent need to understand it and teach your child so that they will know what to do when they get of age. It's very, very important. And for the record, that IRS code is 7702. I sometimes get my numbers crossed, but It is 7702. Please look it up, read about it. It's IRS section 7702, which protects any borrowed money from the cash value account from being taxable. Myth: it's too expensive. Well, in actuality, a child's rate is one of the best rates you could ever get. And when it comes to a life insurance policy, at their age, and a lot of children are not unhealthy, but being so young without health issues, you're going to get one of the best rates possible. And that's for anyone. Myth: it's only for the wealthy. No, it's affordable for everyone. Again, the rates are so small that anybody can really afford it if you're smart about the way you finance your budgeting. For example, a $50,000 benefit for a 5-year-old female will only cost you $23 a month. That's it. $23 a month. People are spending more than that for gas, for going out to eat nowadays. You can't even get a meal without spending more than $20. That's through a drive-through. So we're talking about per month, um, for a 5-year-old, and $50,000 is the maximum that you can get. Now, with Gerber, you can get a $50,000 policy for a 5-year-old with Gerber, but you're not going to spend 23 a month. You're going to spend $43 a month, and the reason is because Gerber, unlike the other carriers, will double the benefit once the child turns 18. And when they turn 18, that 50,000 will automatically turn into 100,000, providing more coverage, and yet the premium will still be $43 that you were paying, way back when. Now, hindsight, if you look at the 50,000 on a 5-year-old with $23 a month, and you think, well, I mean, I'm basically just doing that, doubling it early on. Yeah, pretty much the same. You're pretty much just paying the 43 up front for when they double the benefit. Yet, no matter how you look at it, that's still a good rate. Again, you're spending $20 minimum when you go out to eat. So let's talk about the benefits. The cash value account has a fixed rate of 4.5% of compound interest. Your child could potentially grow $105,400 over a 17-year span. That's a lot of money. Okay, so that means that if your child got a whole life child's policy when they were 0 years old, not even a year old, and they kept it, you kept paying the premiums, and then they turned 17, they turned 18 years old, they have over $100,000 in their cash value account. And they can use that money for anything: buy a house, buy a car, pay off college, whatever the case may be, or let it continue to grow. It is lifetime. It is a fixed rate. It never changes. And the only time it will change is if they cancel the policy or if they add more coverage to the policy. But their rate is still going to be still be at a very low rate. Kind of think of it as if you were purchasing a house at an interest rate of 4.5%, and then 20 years later you refinance on that house, and your 4.5%, because of the market value at that point in time, goes up to 19%. That is the case for most people when they have a new life insurance policy. But when you have it locked in this case, they have guaranteed options where they can increase the value of their policy and still enjoy the benefit of getting a lower market rate. So no, it won't be the 4.5%, or more or less, in this case, they won't be paying $23. But when they're older and they increase their benefit, they will be paying just a little bit more and a whole lot less than most other people trying to get in at that age. Your decisions from today forward will affect not only your life, but also your entire legacy. So, I know a lot of people feel like that they can wait till tomorrow, but we are not promised tomorrow. And I know a lot of people feel like that if I just wait another year or two and my finances get right, well, I could just do it then. It's not a big, and that's true. But do know this: for every year, there is an increase in your rate. With life insurance, the policy increases as you get older, And we don't see when health changes occur, because today you're healthy, tomorrow you were diagnosed with diabetes, or this year you were fine and you were running well and you got an accident, now you're disabled and you're disabled for the rest of your life. Things happen with the blink of an eye. So if you prepare for today, you don't have to worry about that tomorrow. And everything is locked in and guaranteed for you. Your decisions from today forward will affect not only your life, but the entire legacy that you create. This is the time for questions and answers. Please feel free to send me an email, a text message. You want to do a one-on-one, we can go dive a little deeper. If this is one of those live recordings, then the floor is open. Here's my information. Again, I am a life insurance producer and South Carolina Notary Public. My name is Leah Everly, and here's my phone number and my office address, with my email being lever81.rgs@gmail.com. I work in the life insurance industry. I provide policies that are term, permanent, final expense, juvenile, whole life, in-debt, universal life, mortgage protection, and annuities. I'm also offering notarial services, so if you have something that needs signatures, I'm here for you. And also estate planning. If you go to my website, which is www.rosegoldsignatures.com, you will see a list of all my services and prices. I also do estate planning. Um, so if you need to reach out for any of these items or services, please do so. Thank you for your time. I hope you have a lovely day, and I hope to talk to you soon.